All right, welcome everyone. Welcome to the first trade findings and adjustments for 2024. This is Kevin Hurley. I'll be with you this morning. We have a unique situation that Monday is a holiday. What does that mean in option trading if you're looking at doing an option trade? You lose the day. So yes, you lose a day of trading, but I'm looking for more than that, Dave. What does it mean if you have a holiday and you have a day that the market is closed? How would that affect an option trade? I'm gonna let you guys give me a thought process as you're starting to process placing a trade, and if a trade is good for you, because it's this type of mentality that you need to be going through as you're thinking about a trade. And Mary, that's correct. So the thought process is of a holiday on Monday, you get a day of time decay, right? And with the day of time decay, then you're looking at maybe a credit trade where you can take advantage of that. A day of time decay just means that's one more day that your credit will decay and be a profit for you. And it's one more day that you don't have to worry about market movement for your trade to work. So the thought process is usually on a debit trade, right? On a debit trade, time is your ally. On a credit trade, time is your enemy. Reason why? You want that credit to expire as quickly as possible, take your profit, and you move on to your next trade. Now, little different, right? As you're looking at trades, and if anyone subscribes to any trade newsletters or something, we're at the beginning of a year. It's an election year. But what is the direction of the market currently? Well, it depends what you're looking at, right? I'll agree with you on that one. If I was talking about the market, I would be looking at the S&P 500. We have a problem with our S&P 500. We're coming off of overbought. We've hit or are hitting right now a double, if not a triple top. We have a triple top forming with our first level of support at 45.88, second level down here at 43.84. And you could say there's some support here at the 44.56 or 44.50 range. But your main support's 45.88. It's verified by the November, December building a base. That's about where you're looking at the market to come, unless someone sees this differently. Perfect head and shoulders basically forming, which would mean we're looking at going farther down in the near future on our stock market. Kevin, it depends what you trade. I agree with you. If you want to look at 30 stocks, which is not an accurate representation of our stock market, 30 stocks is really more of a television index. Looks like we're failing at building a base. We're also coming off of an extended period of being overbought. But it looks better than the S&P 500. I mean, I would say our lower level right now, it could be that 37,127 range. Or if you are more of a technology trader, NASDAQ composite doesn't look as good. But there we go. We're a little more likely to see a drop here back down to that 50-day at 44,334, the 4,200. Interesting, because thought process is CPI came in hotter, so maybe the January 31st FOMC rate hike meeting will show less rate cuts and possibly another rate hike, which is killing our markets, right? So out of you that are here, what would you be looking at for a trade? So I saw that one. I saw a trade coming out here recently in regards to Apple. And now I'm going to go to FinViz because I like how their charts. Apple's so beaten up, it's a great opportunity to buy. What? It's holding the 200-day bounce 200. It's fundamentally sound. It has a double top up there. What, 197, 197.50. So it bounced from 184 to 190. Historically, this is their worst quarter coming up. Low on inventory, spot through Christmas. Give ridiculously low guidance for the first Q1. I've upgraded a couple iPhones. You know, I was part of that Christmas rush. So I don't know. I'm General Motors. I'm not sure I see an opportunity in General Motors, at least not something that was historic. I would think General Motors would probably be heading more to the downside. That's building a base. If you ask me, the base would fail. And the base would fail again, work my numbers. I'm going to go back up and find General Motors. General Motors for me, probably going to use the 4.7. I would think they could make the 7.76. If I was looking at a price for General Motors for the year, 36.47 would be the high side. Go back and take a look at lesson number 1 on valuations, the Warren Buffett valuation way. This is where I've come up with some of my numbers. But I would not be a fan of General Motors because it's $1 away from maybe its highs for the year. Well, Kevin, it was 40 in July and 40 in March, and yeah, I mean, it's come down. The numbers don't lie, so I would not be using General Motors. In fact, if I was looking for a trade, I would be looking at the historical iShares, the Russell 2000. Historically, the Russell 2000, in fact, let me even bring up on this chart. I have liked the Russell 2000 because historically, you get a nice pop, supposedly, and I'm going to pull it out to 5. You'll get a nice pop in, you'll get a nice pop on the Russell 2000 at the beginning of the year. 2020 moved, 2019 moved, 2021 moved up nicely. 2022 it did not. 23 it moved nicely. So we've got 4 out of 5 years. 4 out of 5 years historically, you get a run up on the Russell 2000 that would be a trade I'd be looking to use or to be in. If I was looking at how to set this trade up, I would most likely want the most amount of credit. It's having a problem getting above 205. I want it quarter, so I might buy shares of the 2000 at a price of 191.51. I would buy them right now. Now take a look at that chart. If you're looking at that chart, is there something about that chart that you might take a peek at and go, you know what, Kevin, I'm just not sure. I'm just not sure if I like the setup for this opportunity or this chart. Any idea? Any thoughts on this? Any thought process on, hey, you know what? Maybe this might not be the best position? Is anyone not happy with using the IWM? No comments. All right. Well, in that case, this is Money Block's older fashion, the legacy platform. If we were going to buy 100 shares of the IWM, I'd want to go out to the March monthlies. In fact, I'm going to need to see some more strikes. I could get a pretty good credit at the 200s. My cost basis would be 188 though. I know I can go out to 205. Cost basis would be 189.57. 189.57. I don't know if that's going to give me enough credit. Let's take a look at that one though. We get a $2 credit. It's down $3.46 today. We got to go to the 200s. Wow, interesting. 200 gives us $3.43 of credit. Last at 336. So that's what I would be looking for. I would be setting up a IWM Russell 2000 covered call with a March 200 short call. If I was going to do this, you would buy the IWM at $191.50, buying to open the Russell 2000 shares, $191.50. You would sell to open a March monthly 200 covered call, and you would get a credit of $3.36. So your net debit to the trade, pretty easy. It's the 191.50 minus your 336 covered call credit. And I'm going to work those numbers out. Well, I'm going to work them out right here because it's easy to see. 191.50 minus $3.36 gives you a limit order of $188.14. So I'd probably give a little bit of a spread in there. I'd probably place my order as a limit order of $188.25. Your maximum reward, pretty simple. Your maximum reward, you're going to sell at 200. You're buying a short, or you're selling a short call, which is the obligation to sell your stock at a certain price for a certain period of time. At 200, you would sell at 200. You would subtract out the 188.25. That gives you a gross profit of $11.75 profit. Or if you take $11.75, divide it by 188.25, we're looking at a 6.24 return on investment. You can annualize it out. Hey, it's going to make, I don't know, it's going to make 25% return annualized. The short answer is on this particular trade, 191.50, actually it's 188.25 times 100. On an $18,000, $825 investment, you'll make $1,175. So on an $18,825 investment, you would make $1,175. All right, thought processes, right? Adjustments. If you place this trade, you have $3.36 downside protection, which is equal to roughly 2% of the total. You've got 2% downside protection. For those of you that are here, is that enough? Is that enough downside protection on the position? So you have adjustments. If IWM tanks, add a protective put at the money, which just means at any time, spend more money to buy insurance on the index. I like using the index because it moves slower than stocks normally do. If IWM tanks roll down the covered call to maybe 195 for a profit and to collect more credit in the short call. And the neat thing is, it's an index. So we're just playing a historical norm that, hey, 80% or 4 out of the last 5 years, the IWM moves. It has moved up as high as 205, which means if it gets back up to 205, you're great. You'll get called out, maximum profit. You'll make a 6.24%. Sitting in an index through what typically is not the best earning season, which is the Q1 of a new year. Simple trade, good return for your investment, easy to adjust, and it's a great way to trade going into the new year. Right now, with it trading at 192, your downside is that that 185, the 200-day would act like, or actually it's the 50-day, excuse me, acts like a support level for the index. Great trade to be in, something I would love to be in myself. So I was going to get into this one. In we go. In we go, and off we go. Great trade to bring in. Good luck to you guys. And it was filled pretty quickly. Talk to you later. Bye-bye.